Welcome back. You're watching Traders Corner, and on this episode, we're wrapping up the year and getting into the detail of what has been a very good year for our portfolios. Joining me for that is Garth McKenzie, editor and founder of Traders Corner. Garth, so let's get right into it and go back to the beginning. How much starting capital did we have, and what kind of goals did you set for yourself for this year?
Yeah, hi Bronwyn, it's nice to be here and to wrap up for this year. It's been a super year, as you said. So we started the beginning of the year with two accounts. We started with the South African account that we capitalized with 150,000 Rand, and then we put into an offshore account, we put $15,000 into that account.
Yeah.
Now, if you work out what the Rand exchange rate was, Rand-dollar exchange rate at that point, it means that the total input capital that we essentially put into this trading portfolio for the year worked out at about 334,000 Rand. And that was what we started with, and obviously the intention was to grow that capital throughout the year with trades on the show each week, live trades that we would then do by following the proper trading principles that we always preach and talk about on the show. In terms of the goals you mentioned, I typically start the year every year with these same three goals, and the reality is that these are good goals to set for yourself because they're goals that you can have control over and that you can try and strive to achieve. It's no use going out at the beginning of the year and saying, oh, I want to grow my capital by 20% this year. That's fine. I mean, we all want to do that or better or whatever, but the point is that's just a number. What you want to do is actually set goals that you can be in control of and that you can strive to achieve. So these were the goals. 2 out of 3 trades were to be winners.
Okay.
We wanted to set out for that. We wanted our winners to be 3 times bigger than our losers on average. And then we wanted to trade actively but precisely. And I set out at the beginning of this year to commit to do 30 trades for the portfolio during 2018. Now, we'll revisit these goals at the end of the show and show how we've measured up against each of these throughout the year.
Well, it's definitely been a bump year. We've had a lot of things on the local front and on the international front keeping us on our toes. So let's check in on the performance.
Yeah, so here it is. So here you can see what our money has grown into. That South African local portion of the portfolio has grown to almost 191,000 Rand. So up 27% for the year to date. Our offshore capital has grown to $16,764. So that's up 11% in US dollar terms. Now, if you work all of that back at the current exchange rate, it means that our money is sitting just shy of 420,000 Rand. Keep in mind, we started the year with 334,000 Rand. So it means that we've made an 85,000 Rand profit on the total portfolio for the year, which is up 25% for the year to date. Now, look, some of that gain in the offshore portfolio is accounted for by weakness in the Rand.
Yeah.
So I guess I can't take the credit for that. But the reality is it's there. I mean, the money was in dollars. It was invested in dollars. The fact that the Rand has weakened during the course of the year has meant that we end up with more Rands per dollar in our account as we sit here at the end of the year. So net, when you take it all together, we're up 85,000 Rand for the year to date, which is a 25.65% return on that total capital that we started the year with.
So a great performance overall. Let's drill down in terms of how we got there. You've got some key stats for us to look at.
Yes, so we always like to look at this, and I love to crunch the numbers at the end of the year. It's kind of a process of marking yourself and reviewing everything that you've done. So I've split it into the 2 portfolios here. On the left-hand side, we've got the local South African portfolio, and then on the right-hand side, we've got the offshore portfolio. So locally, we did 20 trades throughout the year. 12 of them were winners, 7 of them were losers, and 1 was a break-even trade. And then on the offshore portfolio, we did 11 trades in total. 7 of those were winners, and 4 of those were losers.
So it's always key to have more winners than losers, right?
Well, it is. So there's 2 things that you want to get right in trading. You want to obviously have more winners than losers. That's key. So we managed to get that right. But the second thing, which is as important, if not probably more important, is that you want your winners to be bigger than your losers.
Yeah.
That's critical. So if you can get both of those things right, more winners than losers, and make your winners bigger than your losers, then you're essentially onto a winning streak, as it were, in terms of your trading. And you can see here, this slide shows the average loss and average win per trade throughout the year. So on the local portfolio, we've lost on our losing trades an average of 1.28% of our capital, and on our winning trades, we've made an average of 2.89%. That meant that our risk to reward ratio on the local portfolio was 1 to 2.25, which is not bad. I always strive for 1 to 3, which is ideal, but I've found over the years it's just difficult to achieve that. but 1 to 2.25 is not bad. And then on the offshore portfolio, our average loss was minus 1.5%, and our average win was plus 2.09%. So there, the risk to reward ratio was only 1 to 1.39. So not a fantastic risk to reward ratio on average, but the fact that we had more winners than losers, and the fact that our winners were still a bit bigger than our losers, meant that we came out profitable on the offshore portfolio at the end of the year. So all told, generally pretty good stats, I think.
Okay, then you've also got a histogram of the local performance. Just walk us through what that is and why it's important to look at it in terms of measuring our success.
Yeah, it's always a good idea to plot your trading on a histogram like this. So I'll just explain the way this thing works. On the left-hand side of the graph over here, you've got a percentage of capital. So you've got 0 over there, and obviously any gains are represented by a gain in capital on that, or any losses are represented by a negative percentage there. And then along the bottom here, we've got each of the individual stocks or instruments that we traded on the local portfolio, and we're specifically looking at only the local portfolio on this slide here. Yeah. Now, the red bars at the bottom here indicate the amount of risk that we were willing to assume on each trade. Every time you enter a trade, you've got to go out there with the acceptance that one of the possible outcomes is that you're going to lose some money, because that's always a realistic possibility. Yeah. And you have to go out and say, well, how much of my capital am I happy to lose or comfortable to lose? We never want to lose more than 2% of our capital on any given trade on this show. And you can see by and large this year, we've kept all of our risk assumptions less than 2%. Most of them have actually been about 1.5% of capital. So you end up with those short, stubby little red bars to the downside. Then the blue bars are the result or the outcome of the trade. So if you had profitable trades, those would be reflected by a bar to the upside. And of course, in an ideal world, you want those profitable bars to be as tall as possible. I always say to people, you want your histogram to look like the New York City skyline, with lots of tall buildings to the upside and these short, stubby little red blocks to the downside. Now, you can see we had a couple of standout trades during the year. We had an options trade in the first quarter that really did well for us. We made 8% of our capital on that individual trade. And then in the last quarter, we've had quite a good time. We made some good money on Sibanye-Stillwater recently, and then we also did a pairs trade between Pioneer Foods and Zeda. And those two collectively also gave us more than 5% return on capital on each of those. So just those three tall trades, tall bars, there account for a large chunk of our year's profit, actually. And then we managed during the third quarter, we strung a couple of nice winners together as well. Of course, we do have a few losing trades, and those are reflected where you've got these blue bars to the downside. And the critical thing here is that when you lose, you never want to lose more than what your risk assumption was at the beginning. Now, if we average it all out, there you can see the averages. The average loss was minus 1.28%, as we mentioned previously, and then our average win was plus 2.89%. Across the portfolio. So a healthy looking histogram, and the message that I really want to drive home here is the fact that we kept our losses very small throughout the year, and that, as always, has been the secret to our success on the show this year.
You know, we keep saying that we've had a very successful year, it's been great, but how do we compare or stack up against the Aussie, for instance?
Well, this is where it really looks good. So here you've got a chart of our portfolio relative to the All Share Index, and what I've done here is I've taken the 150,000 Rand that we invested into our trading portfolio, our Traders Corner portfolio, and I said, if you had taken that same 150,000 Rand and just invested it into the All Share Index, how would it look at the end of the year? And you can see the discrepancy or the divergence is enormous. Your All Share Index has had a horrible year. As at the time of preparing these slides, the All Share was down 18.9%. Now, just do keep in mind, this starts from the 16th of January. All right, I'm not taking these numbers from the 1st of January. I'm starting it from the first show that we did this year, which was on the 16th of January. And you can see that your All Share Index has really just had a horrible time this year. And your 150,000 Rand would now be worth only 121,000 Rand. On the other hand, our gain is, well, we're up to 190,000 Rand. So you've made more than 40,000 Rand return on your 150,000 Rand investment, which is a gain of 27% for the year to date. So huge discrepancy, and you can see, you know, especially in the final quarter of this year, we've managed to open up a big gap over the all-share index. So it's a stellar outperformance this year.
And then if we take the offshore portfolio and plot it against the S&P 500?
Well, so we'll do that in a moment. Let's
Okay.
quickly look at the histogram here. So this is our offshore histogram. Again, the same principles apply. The red bars indicate the risk that we would have assumed on each trade, and the blue bars are the result on each of the trades. So you can see we had quite a nice string of winners spread across the year on our offshore portfolio, and the average win was just over 2% on our offshore portfolio, whereas the average loss was minus 1.5%. And then in terms of the performance of our offshore portfolio, what I've done here is I've measured it against the S&P 500 as a yardstick. We took $15,000 at the beginning of the year, and we've traded with that throughout the year, and we've grown that to $16,764. If you had taken that same money and put $15,000 and tracked the S&P 500, you'd have $14,492 left. So you were down a little bit on the S&P 500 year to date, whereas we were up 11% for the Traders Corner portfolio this year.
And then you've got a histograph for the offshore portfolio as well,
That's
right?
the one we've looked at already.
Oh, that's the one already.
Yeah.
Okay, so then let's go back to your own goals, because now we've kind of compared it to the benchmarks that are out there. How did we compare to what you'd already set at the beginning of the year?
Yeah, so here they are. So we said at the beginning of the year we wanted 2 out of our 3 trades to be winners. We got 19 out of 31 as winners. So essentially that's pretty much close as damn it to two-thirds of our trades were winners. So I think we get a big tick for that. The second goal being that we want our winning trades to be 3 times bigger than our losing trades. Now here I think I've fallen a bit short. On average, between the local portfolio and the offshore portfolio, the average loss was minus 1.36% and the average win was plus 2.59%. So if you take an average there, it means that our risk to reward ratio was about 2 to 1. So our winners were 2 times bigger than our losers on average, which is fine. But if our goal was to try and make our winners 3 times bigger than our losers, then I think we've still got a bit of work to try and do there next year. And then finally, the idea was to try and trade actively but precisely, and I really think we've strived for that. And I said I would commit to doing 30 trades during 2018. We've completed 31 trades this year, and as we know, 19 out of those were winners. So it's been good in terms of achieving the goals. I think we've achieved those goals for the most part, and the results speak for themselves. And I always say to people, if you can set these 3 goals for yourself every year and achieve those, you'll find that the profits should flow just as a natural byproduct of following and achieving these goals.
So do you want to take one last look at that performance before we end off?
I do. I'm really pleased with this. So we're up 27% for the year in South African rands. Offshore we're up 11%, and net when we take the total invested capital at the beginning of the year and what we've got left over, we're actually up 25.65% for the year to date, a profit of 85,000 Rand, and that profit, of course, we do donate to charity. It goes towards an educational trust that I'm involved with, and it sponsors bursary children at a school. So it's delightful to be able to give something back, and I'm really so pleased with this year's performance.
Absolutely, when you consider what the market has done. Garth, we're almost out of time, so we'll leave it there, but it's not the last episode because next week we're taking a closer look at the trades, right?
Yes, we're going to wrap up for the year and just do a highlights package of what we've done for the year, what some of our best trades were, and not just the winners. We're going to look at a couple of losing trades as well, and keep it honest, of course, as we do, just to revisit and illustrate what it was that got us to this point.
Garth, thanks so much for your time today. So be sure to tune in next week where we look at those trades in more detail. Garth McKenzie is, of course, editor and founder of Traders Corner.